Welcome, everyone, to today's webinar entitled, How to Never Worry About FBAR Again. This is Lee Patton, Assistant Director of Business Development here at Strategic Treasurer, and we're pleased that you could join us as we discuss FBAR timing and requirements and how to never worry about them again. Our speaker for today is Craig Jeffrey, Founder and Managing Partner of Strategic Treasurer. Welcome, Craig. I'll now turn the presentation over to you.
Thank you, Lee. Welcome, everyone. Thank you for spending some of your afternoon or morning or even evening covering a topic about foreign bank account reporting. This is excellent. So we appreciate you spending some time. I know everyone's busy, and we'll get you out of here before the top of the hour, which is our promise. So what is our agenda for today? We've got three key areas and then a summary. So foreign bank account reporting, we'll look at the scope and impact. The scope of FBAR, what it's trying to accomplish is to address issues around tax evasion, money laundering, and terrorism. And we'll talk about that and how that has an impact both on individuals by themselves for their own money, as well as for corporate activity that impacts the organization, as well as individual signers. Next, we'll look at timelines. What should the annual process look like? What should be done at what period of time? Many organizations run into compliance. It's an extra task. They're not staying on top of it as well, and it becomes this annual fire drill of getting the data, wrangling it into a form, loading it into smart PDFs, filing everything in a short period of time. What should be done when to make that process more manageable? We'll look at preparation all the way through filing and archival of that data and information, what's required and what's a best practice. Then we'll look at how to handle FBAR, and part of it is how not to handle it. But we'll look at being intentional about managing your foreign bank account reporting process. We'll also look at doing it internally as well as using an outside research. And as part of full disclosure, we provide services for foreign bank account reporting. That's a function we've done for many years for organizations, and as people move and go to other companies, that's grown. And so we've seen a lot of how that can be handled well from an outsourced perspective, but also what companies do a good job and what are some of those principles and practices that you should do even if you continue to do foreign bank account reporting internally, or maybe you should be doing it, haven't been doing it. That's a regular activity that we see companies starting to do FBAR after they failed to do it for a period of time. And then at key takeaways and final thoughts, we'll look at compliance, we'll look at thoroughness, and we'll look at what resources are necessary. That'll summarize most of the discussion. So that's our agenda for today, the topics that we'll cover. And so we'll begin with an overview of FBAR. I mentioned in the beginning of the outset, what's the purpose? This began initially as a way to combat tax evasion and money laundering. People would have accounts, foreign accounts. It used to be you have a Swiss bank account or something in the Cayman Islands or other jurisdictions where you put the money there if you were a U.S. citizen or you wanted to avoid taxation. You would keep and store that money and you could evade what was going on. And so that was always a push to crack down on that. Also using foreign accounts to launder money throughout all these different jurisdictions where one central entity or taxing authority or legal entity wouldn't be able to find those. And so this has been a long-running process. And then terrorist financing, as we move forward from 2001 with the Twin Towers and the terrorist attacks there to 2010, that flowed through to some of the regulations that expanded what FinCEN required and what foreign bank account reporting was required, particularly for corporations. And the goal was to all add to this list of transparency and accountability to reduce terrorist financing by keeping track of where funds can move from and to and how that occurs and who has authority over that, whether it's an entity having authority or whether it's individual signers. And so creating this link and chain will allow, anytime there's an issue to track back to who had that capacity. And so being able to tie it up. And terrorism helped push this forward heavily. So that's some of the purpose, one of the key purposes or the three key purposes of foreign bank account reporting. What are some of the requirements? You have to provide reports to FinCEN, the Financial Crimes Enforcement Network. You have to load them into the system. You might have to use a smart PDF, which is a PDF that you can copy paste information into, and it's smart that areas can expand. So if you're doing 23 accounts and you have to fill all the account information, you continue to add that information to these smart PDFs. There's requirements to submit that through the Department of Treasury, through FinCEN. There's a BSA e-filing system that data is uploaded to, whether it's a smart PDF or whether it's in the format of a file that they have defined that you can upload. You can transmit and upload that. And that filing also allows you to do that in a test system as well as the production system and get your confirmations of what occurred. So the filing's required. It's required every year. And when we think about compliance, we're always a little bit fearful about penalties. I want to go through these penalties, and I want to give you some general thoughts on that, not official guidance, but just some thoughts on that. We're not trying to create excessive fear. Penalties tend to be pretty steep, and that's why we get our minds focused and concentrated on them when this occurs. So penalties are up to $250,000 and or 5 years in prison if there's criminal intent. You're trying to finance terrorism, you're trying to launder money, you're trying to do tax evasion. You can spend time in jail and pay a significant amount of money if you're caught doing that. The next one is you're responsible for the greater of $100,000 or 50% of the max value of unreported accounts, and that's considered, if that falls under what's considered willful violation. So for an individual account, if you had $20,000, you didn't report it, it was willful violation. The $20,000 you could owe $10,000 on that $20,000 account on an individual standpoint. Well, that also applies on the corporate side. If you're an individual signer and you fail to report, that max value could be however many millions or tens of millions your company, the max value in those accounts that are relevant to foreign bank account reporting. And those sums are absolutely astronomical. And then the non-willful violation, the penalty is up to $10,000 for non-willful violation. The top two categories are primarily, we see enforcement primarily against individuals who have their financial stake in the accounts. They own the accounts. They're, usually you put them in some other jurisdiction, some other country, and are, avoiding taxes, hiding money. It might be maybe not trying to hide money from their spouse. They may be from the government. Maybe they're trying to hide it from their spouse. But the enforcement has tended to be, or has almost exclusively been for those who have a financial interest in the account. But they do apply to corporate signers. The up to $10,000 for non-willful violation is like, I wasn't aware of that. I didn't realize it was a signer. Was that really due? I'm 3 years late. That's a significant penalty, but it's trying to plead ignorance. Can go up to $10,000 for a non-willful violation. Significant sums of money for either of these situations. So that should focus our minds and attention on this. I want to take a moment and have everyone look at the first poll question, or poll questions. There's two of them. The first one is, filing for FBAR will be in FinCEN's Foreign Bank Account Reporting System, Foreign Bank Ownership Secure System, BSA e-filing, or the FBAR e-filing system. So go ahead and select the one that you think is right. And the second question is, are you familiar with the types of financial accounts that fall under the scope of FBAR reporting requirements? So go ahead and select one on each of those, yes or no, on that one. And then on the top section, which one makes the most sense? All right. And you can type FBAR if you like in the chat box. We will go ahead and send the results out to everyone. That's how nice we're going to be. But FBAR is pretty fun, so thank you for doing that. All right. When they're ready, we'll pull it up. All right, so first one says Foreign Bank Account Ownership Reporting System, FBARs. That's a pretty good name, isn't it? And then there's also FBOS. There's the BSA e-filing system. If you look back, this is the majority response, and those remembering back a few slides will know that that's where it goes. The BOR e-filing system is not accurate, and only a few people fell for that one. So that was just a trick question. We try not to ask too many trick questions, but it's Thursday. This is on compliance. We can do that. Are you familiar with the types of financial accounts that fall under the scope of FBAR reporting requirements? Pretty interesting. 56 to 44%, which makes sense why so many people are at a webinar here. There's so many rules. What accounts are included? Does this include an insurance account with a cash balance? I'm not sure. Those things make sense. So we'll look at and go through some of those. There are also some additional resources that you will find interesting and useful to identify what's included in FBAR for your organization. That will include, and we'll go through this in details, what are entities, which entities would be included, what accounts apply, what signers are relevant for filing. And so knowing all of those allows you and us to see what would be in scope for foreign bank account reporting. So who is required to file? This is a good question. I think we all like it. We see a few things there. So if the accounts apply, everything else applies. What's in scope and what's not? So 10,000 US dollars in a foreign financial accounts. Now, does that mean if you had 100 accounts, you had $9,995 in each of those accounts, you don't have to file? No, the answer is it's an aggregate maximum balance at any point during the year. So if you have 100 accounts, they all stayed below that level, but on any given day, if you added all those up, the USD equivalent, total 10,000 or more, you would have to file for all of them, not for each account. So that's an area that causes a lot of arguments. I don't think it should be that way. Oh, we don't like that either, but that's the requirement. So usually if you're a corporate signer, you're going to have to file on all the accounts because rarely will you be a signer on multiple accounts, and the total of all of them in aggregate falls under 10,000. So who's required to file? There you go, if the accounts apply. On the individual side, if you own an account individually in a country, in a foreign country, and you maintain over $10,000, that counts. And so as an individual, you have a financial stake in that account, what's called a financial interest. So that would certainly apply. Most of our conversation today is focused on corporate FBAR filing. So what does the corporation have to file, and who are the corporate signers who have to file? So on the individual side, you can have a financial interest, which is if you own the account, or individuals without a financial interest who are corporate signers. And corporate signers for FBAR, or FinCEN signers might be a better term, a less disputable term, is what applies here. And this is where I make a lot of people unhappy when we talk about what the requirements are, because you can be an official signer, and that everyone thinks that those apply, or almost everyone we've ever talked to thinks that applies. But portal users who can transfer funds on their own or in conjunction with another person, they can dispose of assets. Move funds is one example of disposing assets. And the most common area that we look at, they are considered FinCEN signers, and they are required to file for FBAR. I don't like it, you don't like it, but that's what the law says, and that's what the regulations spell out in detail. But what about the entities that you have, the different types of institutions? Attorneys, CPAs, IRS enrolled agents can file on behalf of a client. And so we think about what are the entities that are included. You can have your attorney, a certified public accountant, an IRS enrolled agent can file on behalf of a client, on behalf of an individual, or on behalf of the organization. So those are some of the options for doing the filing. Who can do those at the institutional level? For entities, there's a list here, larger and smaller institutions, small business entities, subsidiaries. There's a whole set of rules and a large list. There's more than 18 that is worth going through the list and seeing that in detail. So as you look at this, the questions come up: what is in scope? What's your scope? What entities are involved? Are any of them excluded? Can we ignore those? Are all of those excluded? Like, you might be like, I'm at a bank and I'm reporting, I have to report everything through, regular tax jurisdiction. There's ownership, and that's handled through the banking regulators. Oh, excellent. We don't have to do extra and separate reporting through FinCEN because it's already encompassed in other areas. For most corporations, many corporations, you'll have subsidiaries, joint ventures that will fall into this, and many of those organizations will fall into that, of having to be reported. So that's a key area to look at. So what entities fall into play, what individuals, and then essentially all the accounts if you break the aggregate $10,000 limit at any point in the year. So you're probably thinking, I would like to see a picture of a calendar chart to know when I do this. And that's perfect because that's what we're on now. What's the calendar for filing? And, here's a couple key points to look at. This is really a few things that are important. So April 15th in the U.S. is when individual 1040, your regular tax filing forms are required. And what you would file then is you would identify on the schedule, you would identify the countries that you have signing authority on. If this is for the company, you sign in 12 different countries. You sign on accounts that are held in 12 different countries. You have to identify those countries on that form. That has to be included in that particular schedule. And we have information in some of the materials and collateral that you can download. You can see, even screenshots of where that needs to be filed. So you need to include that on those forms if you're a signer. On the bottom side of that chart, if you look down, you can see April 15th as filing. Individual FBAR filing and corporate FBAR filing have to be done, and they're due on April 15th. Now you're saying it's the beginning of April, I've only got 11 days, I can't file it. What happens if I have to wait a longer period of time? Well, the bad news is everything's due by the 15th. The good news is there's an automatic extension for this filing. So the corporate filing, the individual filings are auto-extended until October 15th of each year, or the relevant slightly extended date if there's floods or that falls upon a weekend. So there's an automatic extension. So this is, I always think of the procrastinator's motto: why put off to tomorrow what you can put off to the day after tomorrow. I would modify that slightly here as, why put off to April 15th what you can put off to October 15th. That's not really a great idea. So if you're running late and you have a little bit more time because of the automatic extension, you should still move to get that done and not run up to the later date. That's just providing a grace period to get that done. We have no idea how long they'll continue with that automatic extension, but that's been in place since 2010. But that's the simplified calendar. FinCEN filing is due when your taxes are due, but there's an automatic extension. You don't have to apply for an extension. So bad news, good news, fun stuff. So there's a question that has come in. It says, does the person who enters wires on an e-banking system but does not approve release wires have to submit to FBAR? This is an excellent question. So think about that in your head. Do you have to do that? And the answer is, it depends. So the rule is, if a person on their own or in conjunction with another person can move funds or dispose of assets, if they have that ability, then they have to file. So the question is interesting because it says does not approve a release. So if you only enter and there's a second person who approves and always a third person who releases, those last two people would be the ones that count. That would be our guidance, our informal guidance on a webinar. but those are the two that have to be there before it's the assets disposed. Those are the two that have to work together to get that done. The enter would not be included. But if there's only one person enters, and another person approves and releases, those are two people. Those are two people doing those three functions. Therefore, according to the FinCEN regulations, which follow the law, that would be included. So I know I'm saying things that people don't like. Don't hate me because I'm saying what the regulations are. And that's what it is. And we can point you to the text. You can search for it on the FinCEN website and the IRS website. Both of them contain that information, that unfortunate information. So now we have our second calendar. What's better than one calendar but having two? Here I would invite you to start in the middle of the year for the calendar. So we get into summer months at the end of the summer for those in the northern half of the globe. It says review any changes to filing or filing formats. Announce upcoming filing. This is getting ready. Make sure you look at what are the changes that may have come about through the rules from FinCEN. Any formats that are coming up, sometimes they will announce changes to formats, usually before August. They always provide some type of smart PDF where you can keep copy pasting or typing all the information in. In the manual way, it's pretty easy to use a smart PDF because it's manual, and that change in format, you're still copy pasting or you're retyping information. But they do change the formats, and when they announce that format change, whoever's building your file formats, you have to get on top of that to make sure you can support the new format. And I think it's been about 3 years since the last format change occurred. So this is getting everything ready, looking at that ahead of time. And then as we move from August a little bit farther forward, what happens? We want to make sure that a couple things. One, you want to get rid of any signers who don't need access, that they're removed before you roll over to the new year. Because if someone's a signer on January 2nd, they're responsible for the whole year. So make sure you remove people before the end of the year. Your normal process should remove people throughout the year. And as soon as they are no longer valid signers, take them off. But this is a checkpoint to make sure you get them off before they have another year of filing. But taking it from the top there, update changes to rules or filing formats. Make sure you capture the other information that may be required if there are changes to the filing formats. Then there's a couple: confirmation and review. Review your signers, review your portal users, those that on their own or working with someone else can dispose of assets. Right? There's different ways that can be done. That can be on a portal. It can be done via phone call. Those are all considered signers. We call them portal users. I'm not sure what the best term is. You can call them FinCEN signers. Those are FinCEN signing authority, includes those examples that I said. Confirm your entity list and confirm accounts. Make sure you have a complete inventory. Check through that list. Make sure that they're relevant and applicable. Once you've done that well the first year, then you're really focused on just any changes. And so that's a good way. So that covers the first 5. And then I already went over the last one. There's ensure all signers and portal users who don't need access are removed. Get those letters to the bank, confirm they received it, confirm they were removed before the end of the year. We have in November, secure permission to file on behalf of individuals. You don't have to file on behalf of individuals who are signers for the corporation. They are required to file on their own. The company can file on their behalf if they're given permission by the individuals, the individual signers. So we think it's a good time to ask for that in November before the year gets underway. Can we file on your behalf? And there's forms that have to be signed, and then you're able to, as a company, file on their behalf. And this is a great time to do it. Otherwise, you're sending information to them, letting them know that they have to file, and you may provide tons of information to them to complete the filing. Now, maybe that's not deemed as troublesome if they're still an employee, but what about people who have left? What about people who left 3 years ago who were never removed as a signer on the account until this year, you'll still have to file for the 2023, 2022, 2021 year. They are still responsible for filing with FinCEN to do the FBAR filing. So do you want them to do it? Do you want to have non-employees, people who have left the company, do that filing, or would you like to take that burden off of them and have the organization do it to make sure that that's done? Our recommendation is that the company should do it. The company should do it because the reason they have to file is because of their corporate duties. Why are they responsible for doing this additional compliance work, additional tax works that exist? So now we move to the end of the year from the middle. Then we get back to the year flips over. Now we're coming in on the left side. So what are some of the things we say? Identify high balance and rates. Test new formats. So identify high balance and rates. Once you hit January, usually the 2nd, you have all of the balances for the whole year for all of your accounts. So identify what's the high balance and what rate's necessary. The high balance is what's the high balance in the native currency, in the operational currency of that account. Identify that. The rates you can get those from the IRS, the FinCEN site. If anybody needs to find out where to get that information, you can do a quick search. If you can't find that, let us know. We can give you a link to the site for that. But those are the new rates because the filing is based upon USD equivalent, and you don't use daily rates. You use rates that they have provided. If they come up with a new format, you want to test that new format. Testing is usually available right at the beginning of January. As a company that does file on behalf of organizations, that's when we're testing any of the new formats, making sure our process and our program works. If you're doing that in your company, your IT group will want to do that as well. If we look at the top for what covers January into February, I will follow up on permissions to make sure all of the authorizations that signers give the company to file on their behalf are completed. And we'll make sure that those are all ready. All those forms are signed. They're archived and tracked. You can't just file on their behalf. You have to secure their permission. As we look at towards the end of March, the whole validation and test filing, that can occur in February in some cases. It can occur in March, but it should be completed. You should be done by the end of March. Validate the information, make sure it's complete. Compare it to prior years to see if something's changed or something's missed. And then create your test files, load them in the test system in FinCEN, make sure they pass all of the tests and edits. After that's done, submit them into the production system on or before the final due date. We recommend doing it multiple days before the due date. There's a lot of activity right towards the end. And then once that's done, there's reporting and archiving, letting the individual signers know that the reports have been filed on their behalf. What we do is we'll also let the company know the individual signers have been filed, the corporate filing's been done, and you archive the confirmation messages from the filing, the BSA filing site that you get from uploading it. That's the calendar that we look at for FinCEN. And I spent a lot of time and words on that slide, so we'll go with more pictures now. So how not to handle FBAR, that's the top row. You want to do it right? No. Do nothing. Pretend it doesn't exist. Have no plan. Don't have resources who are cued into what the rules are or how to create the formats or how the requirements apply to these entities, these accounts, or these signers, or wait until the last second and then scramble. That's not a good way. That's not a plan. That's not a good way to go. But doing it right is yes. And you can do it right in-house or you can do it right by outsourcing those activities. So those are the two different ways that work. Very good options. And there's some decisions about those options. So when do you outsource? And I've mentioned that we already do this for firms. And so these are the questions that we go through. And, as we looked at the organization, when we decided to get in the business of outsourcing foreign bank account reporting, it made sense to us because it was complex for most companies. They don't have enough time to do it. There's a lot of elements that change. There's high fees for people. And if you do something like this in significant volume, you can become pretty efficient, and it becomes a nice piece of business. And it takes pain off of people's, pain out of people's backs or whatever, wherever the pain comes from. And that always seems smart to us. But here's the questions that we think make sense for you to step through. On the in-house side, do you have staff capacity and expertise on compliance issues, on FBAR, on taxes? Is it in the tax department? Is it in treasury? Do you have that expertise or not? That might lead you to going in-house. Outsourcing, you may have other high-value tasks that need to be done. You're thinly staffed. You have other priorities. That's part of the question, is just because you can do it, should you do it? You can spend the time to do it. Does that make sense? Is that the best use of the time? The second one is doing it in-house are your requirements simple? You've got a couple banks, a few countries, a dozen accounts, 3 signers. That may be simple enough to say, we're going to do that on our own. We'll use the smart PDFs. It's not that much data, and we're going to do that on our own. As it gets more complex, we're in more countries, we have more banks, more legal entities. We have a number of signers, real signers as well as FinCEN signers or FBAR signers. We have lots of entities. Maybe we have data in different systems. The more complex it is, the more compelling it is in our mind to leverage outside resources. We find that makes tremendous sense. So, I've got one person dealing with one bank, one country, one account. File it on your own. You can fill out, one of the FinCEN, FBAR smart PDF forms pretty easily. The last area I want everyone to think about is FBAR filing includes a lot of tax information and personally identifiable information. That includes bank account numbers. It includes tax IDs like your Social Security number if you're a U.S. citizen, or your tax ID, if you're a green card holder, et cetera. So how well does your organization have processes and systems set up that protect that information? So the left side, do it in-house. We have existing processes that are great at protecting confidential data. Or the filers are able to protect that on their own. They're able to protect the bank information, the company bank account information, if you give it to them to do the filing. And I think that's not a great way to do it, is to give them the bank information. It's better to file on their behalf, but those are some of the options there. On the other side is we really want to make sure we have good standards at protecting all of this corporate and personal confidential information, and having the right approvals and being able to store it and archive it for a period of time. On the outsource basis, if you're outsourced provider, whether it's a CPA firm, a firm like ours, or some other entity that can do that, how are they protecting that data, making sure that it's, the archive is protected and yet available over time? Those are some of the key considerations for people to look at for which route. All right, so next poll question, we're going to pull up and see where we are. A double stack, and I'm going to pick up the pace here. So signers and identifying accounts. What constitutes a signer under FinCEN? I told you most of this stuff, so you should be able to get a good response for it. You can pick all that apply. The second is, have you accurately identified and documented all relevant foreign bank and financial accounts held by your corporation or its subsidiaries that meet the reporting threshold set by the IRS? So that's a question of, do you have a complete inventory of the accounts that you have held by all of the entities in your general sphere? We'll give you a moment to answer those. I'll let people do this. Okay, so there's more questions. I've fallen behind on the questions. A follow-up question. If the person is authorized to only enter wires in e-banking but not approve, are they required to file an FBAR, regardless if there's 1, 2, or 3+ individuals involved in the process? Person 1 is only authorized to enter, not approve a release. So I would answer the question the same way that it's if two people are, one or two persons are involved in effectuating the transfer, if there's only one other person, whether they authorize or enter, that they would be included. If someone else has to authorize and a third person has to approve or release, they would not. So that's a good section to read through what it says. And I encourage people to call FinCEN. We've called FinCEN, I'm not sure how many times, probably 8 to 10 times on that topic, trying to get a different answer, trying to find nuances as people have phrased the questions. But that would be the answer. That's a summary of that. There's some really good other questions. Do directors who are not signers need to file an FBAR? No, they can't on their own dispose of the assets. Now, even if someone can authorize, someone who approves signers can authorize signers, but they haven't authorized themselves, they're not required to file FBAR. There's other regulations related to that, but not for FBAR, if I understand the question correctly. How does the government know if you missed including a bank account? Does the government audit the FBARs? That's a great question. How do they know? I don't know how they audit them, but certainly they, if they audit the company, they could find that information and follow it up. Okay, so I think all the questions have been removed from my question queue. All right, so let's look at the responses. Hopefully you've submitted all of the questions on the signers and identifying accounts, so we can maybe pull up the responses. And yeah, so I'll let you just look at that. I won't make too many comments on this, other than to say the owner of the legal entity does not count, by itself. If you're just the owner of the legal entity, that's not a FinCEN regulation for FBAR. But there's a beneficial ownership information that is relevant, and so that's a little bit tricky. So that would be a good one to do FBAR and BOI together, some of the requirements for beneficial ownership interest. And the last one, a person can complete KYC documentation. No, that does not count. So excellent. Good answers, and glad to see that we were a little bit tricky. Here's a couple things on individuals filing. How do you want that done, or do you want the corporates to file on their behalf? You have tax IDs, social security numbers, account numbers. If you follow this process, see the arrow, the blue arrow heading from confidential corporate data over to the signers. Let's say there's 25 signers. There's 25 points of exposure because they have, let's say you provided them bank information. They've created these, let's say, smart PDFs. They loaded them individually up to FinCEN. Now you have, ongoing points of exposure across the board. So that's really, really pretty broad by sending the information back. And that's certainly an area to be careful with. If the corporates file on behalf, we don't have those 25 points of exposure out in 25 different locations. And if those 25 signers say, yes, the corporation can file for me, if you look from left to right, they sign and they do share their tax ID and says the corporation can file on their behalf. Hopefully that's done through a secure portal where everything stays behind the firewall. It's secured throughout the entire process. That's one of the things that we do. So it's secure, and now the corporation is filing on behalf of FinCEN. So you only have that arrow going down to FinCEN. The corporate filing and the individual filings are loaded directly. And so how do you secure that? How do you manage that? This is a great way of securing the data. So that's one of the reasons why organizations will say, I would like someone else to handle that, or we want the corporation to file on their behalf, or have a third party who can protect the data file on their behalf, rather than have the individuals do that particular filing. So we have what's the spectrum? Just a couple items here. On the right hand side, if you outsource it to a third party, those checks are all checked off. Those are things that you do want to validate with a third party. Make sure that when they move data, it's completely secure. When they store it, it's completely secure, encrypted. Limited access, the principle of least privilege. Filing with FinCEN should also be done and managed securely. There's also some other elements across the board here. If you said, what about knowledge, available upon request? If you do it yourself, you have to build that knowledge up yourself. If you use an outsourced firm, they should be able to provide you with answers and responses to these questions as they come up. How is it stored? How will you store it if you do it in-house? And so that you have access to it for the 6 years that are required. And I did say 6 years, and I didn't say 7 to follow what the rule is. So our last poll question that comes up is shown on the screen. What's your greatest pain point? I love finding out what the greatest pain point is. We consider this one of our headache removal services to help on some compliance areas. But those who have done the filings, what was your greatest pain point? I didn't do the filing, so don't answer others, of course. So this is your greatest pain point, single pain point. Determine if we're required to file, all the way down to providing bank account information to individual signers so they can file on their own. I'll let you guys read that and answer that. I'm going to look at some of the questions. Seems like they're getting moved over. We may have to answer most of the questions in a follow-up. Excellent. So 41% didn't do the filing. Gathering all the necessary information. That's really interesting that 37% found that as the greatest pain point. I will make a little comment on that. Some of the bank account management systems and treasury management systems have gotten quite good at gathering the information. They don't necessarily put it in all the right formats. They certainly don't provide the signing process for individual signers to authorize the company to file. But we found companies that use those services, they make really, really good customers for doing the filing process. So, as you move there, you save yourself a lot of time. It doesn't complete everything that needs to be done, but it's very, very helpful. Securing sensitive information, 2%. So really interesting there. Thanks for answering and responding. There's another good question in the chat box. I'll see if I can start a hedged answer on that one because that requires a little more clarification. But what are some of the questions to ask when you consider how you handle FBAR? I mentioned some of these in the beginning. Just because you can do something, does that mean you should do it? Does it make sense to do it in-house? If you're not set up to do it properly, can you get set up to do it properly, and should you do it? Or does it make more sense to use somebody who specializes in that? There's a number of factors that you'll want to consider and look at. As you look at the system that you use to keep track of bank accounts or signers or amounts, does it complete the entire process for you? Just saying something does FBAR or tracks FBAR doesn't mean it completes the entire process from end to end, including adding advice, including storing, filing, archiving the information. Some of the systems do a really good job at completing many, many of those steps, particularly some of the painful internal steps that need to be done. But make sure you understand, what does it do, what needs to be done, what does the system do, and what remains, and then should we do that? And then, is there value having someone who specializes in this service, or should your team dedicate themselves to different areas of compliance, self-study, and refresh themselves on this each year? And those answers can be either way, depending on your organization, your capacity, what you do with compliance. You address all compliance issues, or do you outsource some of them? A couple items. And then, will you file on behalf of your signers and portal users, or make them do it? I think it really makes sense to do that for them. They're doing it because it's a corporate requirement. Is there a knowledgeable review process when you're filing? Can you answer those questions about what entities, what accounts, what constitutes a signer? When there's all these nuanced questions, you know how to have the answer or how to get the answer quickly. Can you get your questions answered with internal resources? or tapping outside legal counsel, or your outsourced firm. And how will you maintain this vault of filing material? Because it has to be maintained over a long period of time. It's not like you file it and then you can lose track of it institutionally. You're like, oh, I stored it here, and then it gets lost by the third year or the fourth year because you left and nobody knew where it was stored, then you moved different servers. So how do you make sure you contain and control this information on a regular basis? Just like your organization has a process for storing all of the financial records, through the ERP or the accounting system, so too on the compliance side. How do you maintain that over time? Those are some of the core questions to ask. So then, as we get to the compliance question, and there's a few questions in the Q&A box. I'll try to answer some more. But what are some final thoughts on compliance? Ensure you're compliant and file on time. Sure. But rules matter, not just your individual thoughts. I've never had a topic more than this topic where people, treasury managers, treasurers, even CFOs say, well, I don't think that the law means that, or I don't think that the rules mean that. And I wish they didn't mean that as well many times. But we have to make sure that the rules matter and we follow what the compliance element is. And that's a little bit preachy and hard, but I do want to say that that's for everyone's own good. Second is be thorough on inventorying your accounts, entities, signers to make sure you have a complete scope. If you miss things, you can file amendments. That's not a particularly challenging process. It takes time, but it's manageable either on your own or with another party. On the resources, understanding what you need to do on an end-to-end basis, including filing and archival, will help you determine what resources. Do you need to get external help? Can you manage that on your own? How well are you staffed? Are you strapped for resources already? And this presents extra strain, especially during, I don't know what I would call it, especially during a particular time where you have to focus on this and it becomes a bit of a fire drill. So those are a couple of the key questions. I know we have just a few more moments. In your experience, do you see the electronic filing in FinCEN being done by the Treasury Department or Tax Department? That is a really good question. It was majority done by the Tax Department earlier on. From some of our survey results, it is majority done by Treasury. Treasury has to be involved in FBAR filings because they're providing account information and they're also providing balance information, so they have to be involved in it. And that's come down much more heavier on them on doing the filing over time. They're losing that battle if it's a battle. So that's my experience. It's shifted that way. First Treasury, then tax, and then some other areas of controller get stuck with that. I was told an individual reporting requirement has been deferred since 2015. Is this true? If we have to, then how far back do we have to go back? So there has regularly been deferrals on that. The law states that it has to be done. The FinCEN has pushed and provides some deferral. It's been deferred since 2000. I think it was deferred since before 2015. I'm just going off of memory. That's not an official response. I haven't seen any more recent ones deferring it. However, how far do you have to go back? You have to go back 6 years. They're not going to go back 7 years or 8 years. That's different from most of the tax activities where they can go back 7 years. So if you have to go back, you don't have to go back to 2015 or 2010. That is gone, and you can let that ride. We are out of time, and there's more questions. Thanks for the great questions. Really appreciate it. Kai, I will turn it back to you. There's other resources for people to download, and there's contact information for Lee. And when I say Kai, I really mean Lee.
Thank you, Craig, and to everyone for joining us today. To learn more about Strategic Treasury's FBAR services and to get a free bank fee scorecard, please contact me by email or phone, and that offer extends to April 15th. And for more on solving for FBAR, be sure to download our FBAR white paper by visiting strategictreasurer.com/FBAR 2024, which is also in the chat box. Thank you, and we hope that you have a great rest of your day.